Welcome back to another roundtable. My name is Adam. I have Rusmin.
Hello.
Victor.
Hi, everyone.
Thank you so much for joining us today. We're going to talk about the U.S. debt ceiling and whether the U.S. is going to default. I mean, this news has been. This news is kind of like hitting the headlines now.
Yeah.
But with this has happened so many times in the past. But I thought we'd cover it because it's happening right now. Maybe some of you may not be familiar with this, and we thought we'd just cover it and maybe how it could potentially affect the U.S. stock markets. All right. So before we begin, maybe just a very quick background of what this whole U.S. debt ceiling is and what it's all about.
So if you look at the debt ceiling, it basically is the legal limit that the amount of money that federal government that can actually borrow to pay for all the obligations like your social securities, your national defense, and stuff like that. Okay, so this is the ceiling that they put it there to make sure that the U.S. government doesn't overspend on that amount, right?
And so it's your credit card limit.
Yeah,
okay.
It's a credit
US
card
government
limit.
credit card limit.
Okay.
Yeah. So every time you hit the limit, of course, then they need to go into a negotiation, right, to discuss whether they should lift up the limit, which is currently there's a discussion that's ongoing. The Republican refused to raise the limit because they wanted the Biden to actually reduce the spending itself. Okay, so at this stage, the debt ceiling currently is set at about 31.4 trillion. Okay, and that's how much the debt the Treasury can actually issue out.
Okay.
Right, but now they are hitting the limit, and if they don't issue the new form of debt, okay, the amount of money may get exhausted that they have currently in the bank once they get exhausted by, I think earliest they estimate is actually in early June.
Okay.
Right, then they will not be able to pay for the civil servant salary.
Okay.
Right, and many other things.
So basically, the U.S. government will, in a sense, default. Yep.
Yes.
Okay. So, I mean, this has happened so many times in the past. I keep hearing it. It's the same old story again. But it's a real thing, and it has happened. It's come quite close in the past as well.
Yes.
When this debt ceiling has almost been hit, and there's a lot of fear in the market if it really does cross the ceiling and all that. Yeah. What is going to happen? So tell us, what's going to happen if the U.S. really kind of like reaches that limit and kind of defaults?
I think basically the first thing is that they cannot pay their bills, right? So they have to suspend like those like pension payment and your social security and Medicare. They have to stop. And the government spending on R&D, they also have to stop. And especially for their national securities, right, the defense, they may have to cut the salary of the soldier, right? They have to cut back on the spending on all this. And with all this thing happening, right, if they really default, their credit rating, may downgrade.
Okay.
Yeah. And maybe just to do a quick recap on how much US government just spent in 2022, right? So they spent about 6.3 trillion. Right, so and then they actually collected taxes about close to 4.9 trillion.
Okay,
so there's a deficit.
They're spending more than they earn.
Which is about 1.4 trillion, right?
Okay.
I mean, in the company we usually call it losses,
Yeah.
Okay, and if it's on a personal level, basically you're spending more than you're earning, and that amount that losses they need to get from somewhere else, right? So that's where they get the funds from the Treasury, selling the US Treasury, where people like us, when you look at US Treasury, like risk-free, but it's the money that US government actually borrowed to spend on all these things, right? And so that's how much the money that US government has been spending, and they have been facing deficit since 2001. Okay, so isn't a government where can manage the accounts very well as compared to Singapore.
Okay.
But so that deficit amount actually has continued to snowball. That's why every time they raise the ceiling, then because you're overspending it and you borrow more money, and that amount of money that you borrowed, okay, it will continue to hit that ceiling.
Yeah.
So it will just continue to go up unless the government in the future decided to cut back on the spending. That means lower salary, which is not going to be possible, right? Because we live in a world where it's inflation, driven by inflation.
So basically the US government runs a deficit and they need to fund the difference using debt.
Yeah.
So I think was it 2011, I think it was a close run thing where the US came close to a default. Yeah, because they didn't raise the ceiling almost in time. Of course, they did raise it in the end because that's where we are right now. Everything is still running and all that. But tell us what happened in 2011.
They got downgraded by S&P actually for the first time, right, from AAA to AA+.
AA+.
Yeah. So Singapore is still AAA. Okay. But that caused jittery in the market, and there was a lot of volatility, and actually the stock market just dropped about close to 17%.
The S&P 500?
S&P 500.
Okay.
Right, and then it took about 6 months to actually recover back. Okay, so every time that as a default, of course, you expect that market will be more volatile, and U.S. Treasury market like bonds, right, may also drop in value. Okay, because people are expecting that, hey, U.S. government is not even able to pay. I expect a higher interest rate, and that's where it leads to selling of all this U.S. Treasury, and that the yield will actually go up. So the next time when they issue the new U.S. Treasury share, of course, it's going to be a lot higher.
All right.
Yeah, so the cost of capital will actually go up. Yeah.
Okay, so it did affect the stock market at that point in time. So 17%, which is quite a bit of a drop, actually.
Yeah. So if that happens, if that ever happen again, I mean, in June when they don't come to a deal, I think we can expect that the market will be jittery again.
Okay.
Yeah.
Yep.
All right. So I mean, I don't think we can predict. I mean, I would say they're gonna raise the ceiling again. Because how many times have they raised the ceiling?
I think since 1960, I have the data here from the U.S. Department of Treasury. Right? Since 1960, they have raised about 78 times.
Yeah, so to me, they always raise the ceiling, all right? Because there's is everyone's self-interest to keep the music playing.
Yep.
Right?
And if you go back to 1917, and until now, the amount of times that they actually raised the debt ceiling is about 100 over times.
Yeah, so they just keep raising it because it's just a legal limit in a sense. It's just an arbitrary line. They can raise it, but of course the politics in Congress and all that is just making it very messy. But to me, they will raise it. But if they don't and it becomes, I mean, I'm sure they will, but a prediction.
Okay, high probability.
They will raise.
Yeah,
right? And of course, not to mention that the amount of dollars that they owe. Is huge, right? I mean, that's the ceiling that they actually capped 30 over trillion, right? And that amount is actually is in USD. Yeah. And US government can always print money again.
Yeah,
right?
of course. So let's say we expect them to kind of raise the ceiling, but if they kind of like get into a jam till the deadline, and they still haven't found a way to kind of like iron out the differences, then of course, like you said, the market could get very jittery. Yeah. And prices could come down.
Yeah, definitely it will come down. I think because the investors sure feel very scared of the market, right? Yeah, and that's where your opportunity comes, right?
Yeah. So that's why they have been warning that if the deal they don't come to a deal, there could potentially be a recession. Potentially, right? I mean, if you look at what happened to other countries that have defaulted on the debt, like Sri Lanka, Argentina, Italy. Okay, I mean their currency will depreciate significantly, right? If they don't come to a deal, the market will panic. But I mean, they are the first. They are US, so even if they default, I don't know, maybe the market will not be punishing them as much as
because they have the biggest economy in the world, the biggest military in the world, so they can back it up. But I think the point of this whole video, I guess, or this roundtable is that the debt ceiling, this discussion happens every few years, always happens. But the opportunity that we have is that if it kind of gets messy, then stock prices could fall. Yeah. And that's when you have the opportunity to have a look at some of the high quality companies that you've been waiting for. Yes. And then, hey, because of all these macro events, that doesn't really affect the company itself. Yeah. And then you can just jump right in at a pretty reasonable or good price.
Yeah. Yep. So I think look forward to the hopefully they come to the deal. If not, I think the market will start to come down. That's open up the opportunity for us to look at those companies that we have been eyeing the watch list. Yeah.
Because I think they will eventually figure it out. And then, but if they don't, then I think we've got much bigger things to worry about rather than just the stock market. Because if the whole US is going to default and just fall apart, big things are going to happen. I don't think that's going to happen. Yeah. So I guess this is an opportunity for you to have a look at your watch list at this point in time. This is just news that's happening right now. So it could be an opportunity, but maybe they could just figure it out pretty soon, way before the deadline. Yeah. And then nothing happens and these things just go on as normal. Yeah. Yep. But then if there's an opportunity, there's time to look at it. Yep. All right. So I think that's pretty much it about the US debt ceiling. Is there anything else, guys?
No.
Yeah. So we just wanted to cover that because it's been hitting the news recently, and maybe there could be an opportunity coming up if things get messy. If not, just keep calm and carry on investing. So with that, my name is Adam. That's Rusmin.
Thank you.
Victor, thank you so much for joining us. Any questions about this, put them in the comment section. If you like this video, please hit the like button. Tell us you're doing a good job. Of course, subscribe to our channel. Maybe Roundtable is coming up, and we'd love to see you around again.